Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, April the 16th, the year 2018. Let's talk trading. Winners win, losers lose. Sounds like an obvious statement, doesn't it? It's like I'm telling you something you already know, right? But have you actually really thought about what it means? Winners win, losers lose. You see, it's not just about the outcome of the game. It's more about how they play the game. You see, winners, they know themselves. They know their strengths. They know their weaknesses. And so when they play, what they do is they play to their strengths and they play to win. Sometimes it's a little, sometimes it's a lot. Losers, on the other hand, usually don't have a clue about their own strengths and weaknesses. And they wind up making a bunch of silly, stupid mistakes. They're self defeating. So, in other words, if you're in a game and you're equally matched with somebody, if you focus on beating them, maybe you do, maybe you don't. But if you focus on not beating yourself, then you might stand a much better chance. You know, games like golf, bowling, they're individual sports. And what the other person does doesn't really affect you. You know, if somebody rolls a strike, that doesn't prevent you from rolling a strike. If somebody, pars a hole, it doesn't prevent you from parring the hole. So what you have to do is you have to focus on not making the mistakes. So if you make fewer mistakes than your opponent, and chances are, if you're equally matched, you're going to win. And so in trading, what you have to do is focus on making fewer mistakes. Now, another individual game is tennis, where you are actually what the other person, other player, what your opponent does affects what you do, and what you do affects what they do. As you're hitting the ball back and forth across the net, how and where they hit the ball affects how and where you move, and then sometimes exactly how and where you hit the ball. And we know sometimes it's a game of inches in tennis. And so if you're playing somebody equally matched, then once again, it makes sense for you to focus on not making mistakes, keeping the ball in play, rather than trying to hit that fancy shot and having the ball, hit the net and bounce back on your side, or you hit it out. So when we're talking trading, in a way it's like tennis, because you're up against, the world's best. Every time you sit at your trading platform, there's somebody else out there who is bigger, better, faster, stronger, has more money, better access to information, etc., than you do. And so your best bet is to avoid making mistakes. And the biggest mistake you can avoid is by not doing your money and risk management. I bet you guys saw that one coming, didn't you? So when you're trading, what is the stupidest mistake you can make? Really, it's to let a trade get out of hand and you wind up losing more than you were willing to lose. It's just that simple. Now, I'm not talking about black swan events. I'm talking about the day in, day out, your normal trading where you put on a trade and for whatever reason you didn't apply your stop loss, whether it was a mental or you actually punched it in, you didn't apply it, and now you know you're underwater, way underwater, much more than what you say you're willing to lose, and now you've got a mess to clean up one way or the other. So, once again, winners win, losers lose. Let's focus on not making mistakes. And so let's see here. Yesterday, Sunday, which is technically it's still the first trading day of the week because of the Sunday, Monday time zone thing. The yen was up here. It was in the weekly wick zone. And I was telling everybody, you could take that trade south, because chances are you take the trade north from here. So chances are it's not going to stay in the wick zone because price doesn't like staying in the wick zone. And lo and behold, you see we had a low of 107.12 and the entry was 36. So that's 24 pips you could have put in your pocket already. Not to mention all these gaps filled. I think it was EuroCAD we looked at. Yeah, you see EuroCAD was open down here, and look at that. We had a high of 156.01, and we had an open of 27. Ooh, that's about almost 80 pips possible there on that gap play. Actually, more than a gap play, it's just taking it to the north there. So you can see you could have traded the gap, you could have traded exiting the weekly wick zone again. So once again, profitable trades. And once again, I think we had about 5 open gaps. When I pulled up the platform yesterday, you can see they've all filled. You guys, you see this week after week. Just go back to my weekly wrap-up videos and see how many times gaps don't fill. And maybe, just maybe, you might start trading that weekly gap trade. And here again, we can look at the daily chart here on the yen, and you can see it broke out of that wick zone here, but we'll talk about the wick zone a little bit later. And we've got some nice ranges here on the pound pairs. Very nice ranges. You can see how far they're up from the daily open. And looking at the buy zone here, we're looking at the yen right now. You can see here in the Australian, New Zealand, and in the Asian session here, you can see these short opportunities that presented themselves. And let's see, what was that? The Euro Canadian. You can see here it jumped out. Very interesting. The open and the pivot point were right on top of each other. See, was there anything else interesting? Let's just look here. Oh, wow. Look at the pound dollar. You can see we had some buy zone trades, some, just touched sell zone right there and then turned around and moved up. And see, this is something very interesting. You see here, now it touched it once and reversed. And you see here when it touched it again, it did not break it. So if you're really paying attention, you wouldn't want to rush into that short. You'd say, no, let's see if it breaks it. Does it move? But it did, and it turned right back around, giving you the opportunity The hairy hindsight opportunity to make money. I don't know if you guys are having as much fun with hairy hindsight as I am, but I don't remember whoever said that. That just cracked me up. And then let's see. Let's look at dollar Canadian here once again. We don't want to trade it till possibly the Europe session, London session, or the New York session. And you can see here there was money to be made. Harry hindsight. Because you see, even though we knew these lines here, I'm talking about the trade, this trade now, so that's hindsight. Because even though if we were here and you see it, it'd be right in the moment. And since these lines don't change, it's really not hindsight, because it does this every day. You guys see this every day. And you can see here, not much of a range. Let's look at that Euro CAD. I think when we looked at this yesterday, where was it? Must have been down here somewhere, but you can see we put in a low, put in a high. Nice rat zone trade. Red rats feasting. And once again, looking here at the pivot, price went right to the pivot. We knew that. But notice, we've got the weekly pivot here. So we've got the open. We got the central pivot zone. Went to the central pivot zone, exited one side, exited the other, and it came down, took out the weekly pivot, almost to the daily S1. We got the weekly S1 down here. So now the question is, where is price going to go next? Right? And now we have our price action. Once again, hairy hindsight. Red at you got a one ball up here, red at the line, red at the line, red at the line. Okay, you had a green at the line. Whoops, that one didn't work. Red at the line, get your money back. And so on and so forth. It's not that difficult. It really isn't. See, once again, what's the mistake? What does the loser do? I mean, really, you're looking at lower high, lower high, lower high, lower low, lower low. Do you really have a reason to take this trade here? I mean, yeah, at the time you had a higher low, but I mean, if you took that trade and you saw it come back down and turn red, it should have been a scratch. I mean, let's see, open 37. So what? Maybe 3-4 pip loss at the most. Out. Pick it up here and reverse. I mean, it broke that bottom and just trucked on, right? Harry hindsight. And we can look at the 5 lines from the previous session: high, mid, close, open, low. And we've got the H1 candles taking the trade of the H1 at the line. Once again, we can see it was profitable. Oh yeah, I need to move this up. I thought I did that. I'll have to do that. And now we're looking at the wick zone. Price doesn't like staying in the wick zone. As you can see, in, out, in, out, in, out, just like every other day. And the holo zone, you can see here, we put in the highest open, came down, put in the lowest open, dipped back in, money to be made, dipped back in, money to be made. You can look, drop down a time frame here. And in this case, maybe you have to drop down another time frame. You can see here you want to really have an open. So I guess you'd have to come all the way down to the 1 minute time frame to see an open in here to get that trade. So you see here we got an open and a nice trade out. And it's okay to switch up time frames like that. That there's no rule that says you can't.